Hey everybody, this is Danelle and welcome back to Network Chain. Today we are going to talk about Three Arrows Capital and the cascading effects of them filing bankruptcy and also do a quick market update. But we want to learn as much as we can about the overall crypto markets. And it's very risky. It's still a very new asset class. So there's a lot of experimentation that is happening in the different types of ways that we can use cryptocurrency to um, be able to have yield, just like you do when you're getting interest from leaving your money in a bank account. As many of you may know, when you leave your money on Bank of America or Capital One or Wells Fargo or any of these major traditional banks, you can receive interest for leaving your money in a checking account or a savings account. But in actuality, the bank is also in turn using your money to create a form of yield, and then they're giving a portion of that yield back to you, the customer. That's why when you try to withdraw a large sum of money, say you want to withdraw, 5 figures worth of money out of your account, there are often times where it may take a period of time before the bank can actually let you withdraw that money out. And a lot of that has to do with the fact that they are also using that money elsewhere. So things of this nature are also happening in the cryptocurrency market, but because it's still the wild, wild west, there are a lot of different experimentations that are happening and a lot of different ways people are finding to make larger yields, and some call it a Ponzi scheme. And what a Ponzi scheme is a fraudulent, so let's just make it clear, it's a fraudulent investing scam, as you see here on Investopedia, promising high rates of return with little risk to investors. A Ponzi scheme is a fraudulent investing scam which generates returns for earlier investors with money taken from later investors. So basically, it's also known as a pyramid scheme. So the more people that come behind the earlier adopters, that money that's coming from the people later on in the line of things are actually then using those funds to pay people who came in a little bit earlier. So those at the top are making more money, those who came in earlier, and those funds that are coming in from people who came in later um, are basically funding those who got in earlier and giving them a higher return. So eventually it can bottom out when there are no new vet investors coming, or the people at the top are trying to get all their money out. And when that happens, that's when the Ponzi scheme collapses. So one of the more famous Ponzi schemes was one of Bernie Madoff, which was exposed in the early 2000s, and he ended up going to jail, and it affected a lot of retirees and a lot of other investors because he had created this entire Ponzi scheme. So people say Ponzi schemes are basically what we are involved in, just generally speaking, when it comes to the macro environment of investing, whether it be in securities or other capital markets. So it depends on how you look at it, because just like in stocks and in other investable assets, those who get in later, a lot of times can be left what they call holding the bag. So some people look at that as also a Ponzi scheme. But let's do a quick look at the crypto market right now. We go to our trusty coin market cap. As you can see, Bitcoin is still holding around that $20,000 level. It's currently up 12% over the past 7 days. It is now at about 21,000, and Ethereum is still also holding up pretty well in that $1,000 range, and it has gone up 15% over the last 7 days. We'll look at the top 10. XRP is still holding up pretty well in the 30 cent range or so. It's gone up 9% over the last 7 days. Cardano holding at 48 cents. Solana holding at around $38. It has gone up 15% over the past 7 days. And Dogecoin is still hanging in there in that 6 to 7 cent range. And Polkadot at 11 at around $7.25. So many of you may have heard of Terra Luna, and a lot of what has been happening, the cascade of, if one thing starts to fall apart or break down, then there's a residual effect of many other things breaking down behind it. And because there's been a lot of money and a lot of hedge funds, and we'll go into what happened with Three Arrows Capital, is when certain funds, particularly large money players, get involved in, what is an investment that eventually bottoms out or crashes, then there's an effect and a domino effect basically that affects everyone else in line. Because right now, at least in crypto, we're still seeing, because we're still a small market, we're still, as you can see, the market cap total is less than $1 trillion. So in comparison to, the stock market, in other markets, gold just by itself, gold as an asset is approximately 9 to 10 trillion dollars. So we're still very, very young and very new in this space and not regulated. So it is still the wild, wild west. So when there are larger money players that are involved, if something happens to that particular fund or firm or bank, then it can have an effect on everyone else that is involved in the cryptocurrency space. So Terra Luna, they had a stable coin, an algorithmic stable coin called UST, also known as the Terra stable coin, and it broke down. And there was so much money in that Terra ecosystem. And as you can see here, it was a so-called stable coin that was supposed to be pegged to the US dollar. And when that broke down, it ended up causing an effect on a lot of other firms and companies that had money in this particular asset. And what happens with decentralized finance, when you're putting money into the system and trying to get yield, so you're basically staking that money, then when you're trying to get it out or want to get it out, it's locked in smart contracts only after a certain period of time, until if there's only a certain period of time that you can actually get that money back. So if you're unable to get it out and you see an asset is starting to go down in price because people are trying to get out because they're seeing that it's no longer staying in step with the US dollar and it's starting to lose value, going down to 94 cents on down, then those who had money locked up in these decentralized finance mechanisms couldn't get it out. And so when that happens, that means that they're losing value. And we're talking about people and firms that were putting in tens of millions and hundreds of millions of dollars into some of these cryptocurrencies, and particularly in Terra Luna. So Three Arrows Capital, which was one of the largest crypto investment firms in the world, and they, I believe, are they filed bankruptcy recently in the British Virgin Islands. So that's where they were incorporated, and they were invested in a lot of cryptocurrency at one time, supposedly worth billions of dollars. So they were invested in many base layers, as you can see here: Avalanche, Bitcoin, Ethereum, Kusama, Near, Polkadot, Solana, Terra, as you see. And so when Terra broke down, that's when everything started to fall apart for them. And then the companies that loaned money to them, because what a lot of people do, they use leverage, meaning that they will take out more than they're loaning, than more than they actually have as an asset. So if I have $1, I can go to a particular decentralized or even centralized bank and say, hey, I have $1. Can I borrow $1 on top of the dollar that I have and take those $2, and hopefully I can turn that $2 into $4, so then I can pay you back your dollar, and then I in turn made dollars off of that initial investment. So that's what was happening with Three Arrows Capital, but instead of $1, we're talking about tens of millions of dollars, hundreds of millions of dollars. So they also were involved in some decentralized finance platforms, including Aave, which is one of the more popular decentralized finance mechanisms that are out there. Kyber Network is also very popular. So what happened is Three Arrows Capital borrowed money from some of the larger lending platforms that are out there. One of them, as we've talked about before in our previous videos, BlockFi, lended out, from what I'm hearing, over $1 billion to, or around $1 billion, I should say, to Three Arrows Capital. Now, at least they took some collateral. So when you take collateral, that means if you're going to borrow money from me, I need to be able to hold something that you have of value just in case you default and are unable to pay me back. So that's also known as being liquidated. I'm going to liquidate whatever collateral that I have of yours to be able to at least hold and retain the value that I lent out to you. So BlockFi is one of the crypto lending exchanges that let Three Arrows Capital borrow money from them. But now that Three Arrows Capital has claimed bankruptcy, is filed for bankruptcy, they potentially could lose whatever value they tried to loan out to Three Arrows Capital. So they are having some issues and have received a loan from FTX due to the sketchy situation with Three Arrows Capital. Blockchain.com, they came out and said that they are still running regular operations. They haven't, affected their customers in terms of restricting withdrawals or anything like that. But they also have been affected in that they gave out a loan to Three Arrows Capital for reportedly upwards of $270 million. Also, Voyager, crypto lender, apparently, from what we're hearing, they didn't ask for any collateral from Three Arrows Capital, and they loaned out over $600 million and have now, this past week, claimed bankruptcy. And of course, as you can see here in this article, customers of Voyager are extremely upset. And in their first bankruptcy hearing, as you can see here, Voyager Digital described a rocky relationship with its customers at an initial bankruptcy hearing on Friday, saying it had received threats after freezing customers' crypto accounts. In the company's first bankruptcy hearing, they're being represented by Kirkland and Ellis, which is a well-known national, really international law firm, and they're working on their bankruptcy restructuring plan. And as you can see here, customers, they're doing this, as they say, to try to help retain at least a portion of the customer's funds. They filed bankruptcy protection in Manhattan on Tuesday, blaming a recent slump in the crypto markets that caused it to freeze customer withdrawals. The company has 3.5 million active users and over 5.9 billion in crypto assets at the time of filing. The recent crash led one fellow crypto lender, Three Arrows Capital, to file for bankruptcy in the British Virgin Islands. Two others, Celsius, which we'll talk about in a second, involved, have blocked customers from withdrawing crypto assets. So as you can see here, under the plan, if no buyer emerges, Voyager would give its customers all existing Voyager tokens, 100% of the company's equity shares, any proceeds from a $650 million dispute. So that is the amount of money that Three Arrows Capital owes Voyager, and a predetermined partial repayment of the specific cryptocurrency held in their account. So this is part of their recovery plan, and they're describing their efforts on how they're going to find ways, hopefully, to be able to recover some funds to hopefully pass along to their 3.5 million active users. So as you can see, there has been a cascading effect from this bankruptcy of Three Arrows Capital. Also, another embattled crypto exchange, as we talked about in our last video, is Celsius. There's already been a number of lawsuits that have been filed against Celsius, one claiming that Celsius is in fact a Ponzi scheme. In the meantime, because one of the things that's the beauty of the blockchain is that everything is transparent. You will be able to see on the blockchain exactly what is happening. Now, you may not always be able to see which wallet address belongs to a particular person or a particular company, but you can actually see the action of what's happening on various addresses. So there are accounts that are out there and firms and people that are out there who are tracking exactly what's happening on the Bitcoin blockchain as well as other blockchains, and they report what's actually happening day to day on those particular layer protocols. So as you can see here, Watcher.guru been able to show that Celsius has paid off their Bitcoin loan. Their liquidation price has now dropped to zero. So they've paid off a loan that they had taken out on some of the various decentralized platforms. One of them being Aave as well as Compound. And so they've been able to pay off some of the loans that they had taken out using customer funds. So some people are very distraught and very upset because many people, unfortunately, put a lot of their savings, if not all of their savings, into the Celsius platform, which is not advisable. Once again, we are not financial advisors. We're learning along with you, but we think it's very important for you to understand some of the pitfalls that are coming in the cryptocurrency space because we are still very new. It's, Bitcoin came out in 2000, the white paper came out in 2008, the first transaction in 2009. So we're still very early on, 13 years later in this asset. When you think about, the capital markets and equity markets are like decades, 100 years old, 100 plus years old. So we are still very early and we still need to understand it's not regulated. We're still in the wild, wild west. With that, you can make a lot of money, but you can also lose a lot of money. So it's very important that we understand the macro environment and we have to be very, very careful with where we put our funds. So there's a lot of news here, but you want to be able to read through the BS, be able to also differentiate between what is fact and what is speculation and what is fiction. So there can be a lot of noise, particularly on Twitter and other social media platforms. So you want to make sure that you get as much information as possible. Try to follow reputable sources. And even sometimes the reputable sources can get it wrong. There's been times when CNBC and Bloomberg have reported things that are inaccurate. So you just want to take everything with a grain of salt. Even what we tell you, you definitely want to make sure that you follow up and do as much research as you can with regards to what's happening in the crypto market. So we just wanted to give you a brief overview of what's going on currently with Three Arrows Capital, with some of the other exchanges that have been and crypto lenders that have been affected. Voyager has now filed for bankruptcy. Three Arrows Capital filed for bankruptcy. Many people believe Celsius could be next. So this has also affected the cryptocurrency market. And one of the reasons why Bitcoin may have fallen down as much as it has over the past couple of months, many of it happening because of Terra Luna and what happened with the depegging of their algorithmic stablecoin. So there's still potential for more bankruptcies to happen, and even for the crypto market because of these liquidations, because we have to have forced sell-offs because people are unable to pay their loans back that they took out. There's a possibility we could see some more downside. But at the current time, Bitcoin and Ethereum are holding at that approximately 20,000 and 1,000 range. So we will keep you posted. Please feel free to reach out to us. We look forward to connecting with you soon. Please join the chain. We look forward to linking up with you very soon. In the meantime, please be safe and take care out there. Till the next time, bye-bye.